value promotion deals. Just like how Subway did back in 2008, $5 subs. That's how they ramped back up their operations. Everybody was killing those. I mean, because to be honest, because people didn't have money like that to spend, and people who did have money were scared to spend because they didn't know how long that recession was going to be. So a $5 sub that can be split between two people and a dollar bag of chips. I mean, that's what people did. So if you see a lot of those from these companies now or in the very near future, they say, something what's going on in the economy. That's when I come around, got the whole thing wobbing, wobbing, wobbing. When I come around, got the whole thing wobbing. So, welcome back. I'm your host, Marcus Demitri.
And this is Anonymous J once again.
This is Minority Wall Street. Simply put, we're here to increase your investment mindset. Our motto is once you have it, you own it.
Yes, sir.
And profits over everything. So today is Monday, August 26th. This video will be uploaded today. So we're going to recap in today's video. We're going to recap what happened last week in the market. We're going to talk about the Popeyes versus Chick-fil-A, the chicken sandwiches fiasco, and what companies actually will be profiting from that, and how we can get into that as investors, and then just everything else. So, how was your trading this week?
Trading, it stayed put. Pretty much stayed put. I didn't like the temperament of the market. Particular things that were occurring. Jackson Hole, the G7 meeting, all these different people from different countries getting around talking about the economic prowess of the companies themselves. So,
hold that thought. My son just came home. I see his bus outside.
Because of the temperament of the market, what's going on with the trade wars, the ECB, Brexit deal, Fed interest rates. They had two meetings, the Jackson Hole meeting in Wyoming, also the G7 overseas in France. So there's a lot of conflicting things going on. And different heads of the Fed were actually saying, hey, maybe we should raise rates, we shouldn't. But Jerome Powell actually said, hey, it's economic based. So based upon the economy, what's going on with the consumer sentiment, everything else like that, they'll make a decision in September. So I felt as though, hey man, with all this going on, I don't think investors are actually really confident, in placing their money in the market. Yeah,
and I agree, and I should have thought about that a little more in depth last week. And same way, I'm thinking about the next upcoming week, this week, because so. In my opinion, as far as where I see the direction of the market going for this week, I'm gonna go bearish.
Yes.
I'm gonna go about 30 points, and the reason being is that 30. I just want to say 30. And second reason is that we're kind of leading. This is the last week of August into the trading week, and next week is holiday week, Labor Day weekend. So typically, investors tend to have no activity within the market unless taking gains. So there's not going to be a lot of money moving back and forth within the markets regard to increase in the market. So that's why I'm going bearish this week. And also we had 3 weeks of negative returns within the market. So, but good thing we're still up 14% year to date within the S&P 500. So that's my reason why we're going to go down.
Yes, and I believe, like I said, I'm bearish as well. Particular sentiments that he just said. But I'm going 46 points. From the open to the close, the S&P will be down 46 points.
46 points?
46 points, yes, sir.
Okay. We are going to track this, so I think we should do a bet. Who gets the most right, who are the right most of the time.
Who's right most of the time?
We should get like a monetary value. I think of $1,000.
All right, man, we'll see.
No, $1,000 should be. If we talk about investing, I mean, we should come up with.
I'm up one already, so it doesn't matter.
Yeah, up one. So we do it the rest of the year.
Okay.
Whoever has the most weeks being correct will get paid $1,000.
Got you.
Seriously, no, I'm being dead serious. Okay, no, $500. I have 2 kids. $500. No, we'll do 250.
All right, man. It's
250.
Okay, got you.
250. I have 2 kids and a mortgage and a wife. So yeah.
He does.
Yeah. So 250.
Got
All right.
Okay.
So let's move on to this Popeyes, man. So have you had that fried chicken sandwich?
I've had fried chicken sandwich. No, I have not.
And why not?
Because I eat beans all the time, man.
beans. No. We're like, besides eating beans, you haven't had meat in like 2 weeks. I mean, not 2 weeks, 2 years.
2 years.
Yeah, 2 years. So
I've been doing pretty good.
yeah, vegetarian slash vegan type.
It depends on how I feel, man.
Yeah, 'cause you still eat cheese and dairy, man. I've seen you, so you're not.
It depends if it's presented to me, yeah. But you right.
Yeah.
Go ahead. You right.
Yeah, but actually, I had the chicken sandwich, as you can see. Me and my wife, we went to Popeyes last week during lunchtime, and I mean, I thought I was going to a football game. The Falcons. I thought I was going to a Falcons game, man. The line was wrapped around the building.
Yeah.
It was nobody moving in the line. There was like over 50 people inside of Popeyes after we have gotten our meal. I mean, it was straight crazy. As far as customer service wise, I mean, they tried their best. They tried their best. I don't think Popeyes really did the best job of preparing them for the onslaught of social media. I mean, who would expect people to go
Crazy like that. Yeah.
crazy like that? But it was just crazy. I mean, they only had one cashier. Just one cashier taking orders in the restaurant. So it was crazy. And Chick-fil-A, like, to be honest, it's like that every day in Chick-fil-A.
Yeah, you're right. The morning time.
The morning time, lunchtime, dinner time.
The 2 lines and everything. Ordering before you
I mean,
actually get there.
Chick-fil-A would have had us out there in less than 5 to 7 minutes.
My pleasure.
At most.
My pleasure.
What you mean your pleasure? Oh, that's what they
say.
Oh, yeah. Yeah, 7 minutes at most, and they won't run out of chicken.
Mm-hmm.
I mean, Popeye was closing because it was running out of chicken.
Yeah.
Or their deep fryers was down.
Yes.
Or they didn't have any more buns. Customers.
Yeah.
Going to their restaurants and just taking over their chicken sandwiches.
Mm-hmm.
But we want to figure out what company is actually going to profit from this mass amount of sales and hysteria. So the company that's associated with Popeyes, that's the holding company, is Restaurant Brands International.
Yes.
They actually are a Canadian type company. They trade on the New York Stock Exchange. Their ticker symbol is QSR.
Yes.
They formed in August of 2014. They operate under 3 brands. Tim Horton brands, which is associated with donuts, teas, coffees, refreshment, things of that nature. Burger King, which is the second largest hamburger fast food chain, as well as Popeyes, which is the second largest chicken concept restaurant brand. So those are the 3 business segments that they operate under, and they looking pretty good this week because of their chicken sandwiches.
Yeah, that's good.
From what I heard, they had like $25 million worth of ads, free advertisement because of what's going on.
That's crazy.
With the chicken sandwiches and stuff like that. And looking at the stock price, before they acquired, because they acquired Popeyes and I think Burger King around March of 2017, so like a year and a half ago. So looking at the stock price, it was like at $50 and some change, and it actually increased from then to today about 50% to like 75 and some change. So they're doing pretty well since the acquisition. So I think there are. Long term, I think it's a good play. We don't give financial advice or anything like that, so we just recommend to look into it a little bit more. If you have the capital to put it in, if you like the company, go ahead and do so. They also have dividends.
Yes.
So you want to spend a little bit on the dividend?
Yes, I want to talk about the dividend pay. So let's say from that particular point that QSR is the ticker symbol, Restaurant Brands International is the actual name of it. So after they acquired Popeyes, the dividend pay actually jumped from 20 cents to 50 cents what it is now. So if you actually own the company, if you own that company, and that dividend pay jumped like that, you have made a good amount of money. And that's actually pretty crazy for that actually to happen in that short time span. So owning the company long term, like you said before, would be great, would be a phenomenal play at this time. So that's, like you said, that's more of a long-term play. Stay within it, no matter if the market goes up or down. It's not a 6-month play.
Yeah.
It's not a 2-year play. It's a 5 to 10-year play. And so we see that brand actually continuing to build. And it's fairly new. It's actually
fairly new. And I know they're looking to acquire other restaurant chains in the future, which I believe with the success of Burger King and their rebranding of like the Impossible Whopper and Popeyes with its chicken sandwich. I mean, the sky's the limit regarding to marketing and publicity of any other restaurant brands that want to come up under Restaurant Brands International. So while doing some research, we noticed here in Atlanta we have some notable iconic businessmen that essentially own every Popeyes here in Atlanta, Georgia.
So let's talk about the two individuals, man. Let's talk about them. So most people are familiar with Hank Aaron, Henry Hank Aaron. He's a phenomenal baseball player, played for 20 plus years for the Atlanta Braves. Home run king before Barry Bonds actually took that mantle. And he actually owns 24 franchises of Popeyes. Like, he's the owner of those franchises. And another individual, his name is Mac Wilborn. And he actually also owns a good amount of franchises of Popeyes and Eddie's Ice Cream and what else does he actually own? Checkers. Yeah. And he has the number 1 and number 2 selling franchises of Popeyes. He has the one actually in Hartsfield International Airport. So I mean, they've actually been money. That's money. They've actually been able to profit very, very well off of it. So behind the scenes, all these brands and everything that you see, there's money behind it. You just have to, like we're doing, we're presenting the information to you. So the whole hoopla about, hey, we're not profiting. There are individuals profiting. It's a capitalistic society. You just have to know how to get it. Would we prefer to be me personally, would I prefer it to be, owned and run and the CEO is actually black? Yeah, that'd be perfect. But at this point in time now, it's like, okay, this brand, what it's actually doing, owning the franchise, owning the stock, giving dividend pay. I mean, that's a way that you can actually make money on the brand that people eat like so I think it'll be smart for people to look at this and utilize it to their advantage and, get into the investing world.
Yeah, and going back to Hank Aaron, he owned Krispy Kreme as well. He owned 2 locations.
Wow. Okay.
So Hank Aaron getting his money.
He's getting his money, man.
And from what I read, he's going to be opening up another location. I think in the East Point area.
Oh, gotcha.
And that total build out cost from ground up is $425,000. So an investment of $425,000. I mean, that's a lot of money as far as for me right now, but for him, that might be like a value meal type spending. I think he'll get a nice return from that investment. But this whole overall in this video is that finding like creative ways to invest your money. As far as from these 2 gentlemen that are successful here in Atlanta, Georgia, their main investments are food companies. And so people think like food companies, that's considered slow money, but it's also considered stable money.
Yes.
So if you look at when the economy recession occurs, like prime example 2008, when the economy dipped down, a lot of these high fancy restaurants was like losing money because no one had the amount of money to go spend frivolously on those particular meals, and they didn't want to save money, but people still want to go out and eat.
That's true.
But they were like, well, we want to spend less, right? So they went to Subway, $5 subs, they went to McDonald's value meals and stuff like that. They go to Walmart to shop and for food to cook at home. They go to Popeyes Chicken for those value type meals. So those particular companies within that industry have like a good market share hold on those value food items to where when the economy dips down, they're not losing as much money, remaining stable, or making a profit because everybody's still patronizing their stores. So I take on it. KSR, look into it. We're not financial advisors, but this is a company that you may want to look into for the future.
Yes, sir.
It's a newly formed company, 2014, which is fairly new. So there's a lot of long-term potential, and they are looking to expand to other restaurants. So if you're interested, look into them. And that's it, man. This is what the video about.
Yes,
So peace.
When I come around, got the whole thing wobbin', wobbin', wobbin'. When I come around, got the whole thing